If you're a contractor and you picked your tax year without even thinking about it, you might be leaving money on the table. Or worse yet, setting up yourself for IRS headaches. Calendar year, fiscal year, short tax year. Most builders don't even realize they made a choice until it's too late to change it. So in today's episode, we're going to go over the accounting period for your construction business. So let's get into it. Hey everyone, if you're new to the channel, welcome. We talk all things accounting for contractors here. My name is George. So if you're running a construction company, especially with uneven cash flow, seasonal work, retainage, or long-term contracts, this matters more than you think. So let's break it down in plain English. What is a tax year? Every business has to report income using a 12-month accounting period. The IRS calls this your tax year. Most contractors automatically use January 1 through December 31, and that's called the calendar year. But technically, you can choose a different 12-month period called the fiscal year. That ends on the last day of any month except for December. So instead of December 31, your year could end March 31, June 30, September 30. But here's the catch. If you're a sole proprietor, an LLC taxed as a sole prop, a partnership, an S-corp, or a personal service corporation, you are generally required to use the calendar year unless you can convince the IRS that you really should have it otherwise. And for small contractors, the IRS expects calendar year reporting. So you can't just wake up and say, I want my tax year this year to end in June. You would need to file a Form 8716 and show a legitimate business reason. So this begs the question, when would a contractor want a fiscal year? Let's say you're a contractor whose busy season runs March through October, and winter months are slow. If your tax year ends December 31, you might be reporting income after your most profitable stretch, even if you haven't collected all receivables or retainage yet. In this case, a fiscal year ending March 31 might better match your operational cycle, your job completion cycle, and your cash flow timing. But here's the reality. Small construction businesses rarely benefit enough to justify the IRS approval process. And once you choose your accounting period, you basically can't change it without IRS approval. So you really should choose carefully from the start. So we should mention one other thing, that payroll is always on a calendar year. So even if you use a fiscal year end for your income tax reporting, payroll taxes are always on a calendar year basis. That includes W-2s, 941s, 940s. Those are January through December, and you won't be able to change that. So usually that alone has contractors stick with a calendar year across the board. So let's talk about short tax years, and this one's very important. So this happens when you either start or close your business mid-year. Let's say you start your construction company on July 15th. So your first tax year will be short tax year, and it would run July 15 through December 31. That's a short tax year, and this is where mistakes can be made. Because in this case, certain deductions must be prorated. For example, depreciation on equipment, Section 179, certain amortized expenses. If you buy a $100,000 excavator in August, your first depreciation may not look the way you expect. The IRS requires matching deductions to the short operating period. This can affect tax planning, estimated payments, cash flow projections. So if you launched mid-year and your numbers look weird, that's probably why. So the IRS allows two main methods of accounting, cash basis and accrual basis. And most small construction businesses use cash basis because it's simpler. You report income when you receive it and you deduct expenses when you pay them. But larger construction businesses, especially those with long-term contracts, may be required to use the accrual method and the percentage of completion. Your accounting method works hand in hand with your tax year. Choosing the wrong structure can create unnecessary complexity. So the IRS does not require a specific bookkeeping format. You can use QuickBooks, Sage, manual systems like Excel, even though that's not recommended, but it technically would be allowed. What matters is that for your records to clearly reflect your income and expenses. And here's the big one, you should keep records for at least 3 years. If you're in California, 4 years with the FTB. And 6 years is definitely the safest, just in case they argue a gross income 25% or greater misstatement. In construction, where audits can often revolve around job costing, 1099 subcontractors, payroll classification, and equipment depreciation, bad bookkeeping is usually the number one reason contractors lose audits. Not fraud, not bad intent, just sloppy records and sloppy record keeping. So all this being said, what should contractors actually do? For 95% of small and mid-sized construction businesses, use a calendar year, use cash basis if eligible, keep clean job cost records, understand how short tax years impact deductions, and don't change accounting periods without professional advice. Complicated tax structures don't make you sophisticated. They make you exposed if not handled properly. So if you're a contractor and you're not sure what tax year you're on, whether you're cash or accrual, or whether your first year was handled correctly, that's something you want to fix early and not during an audit. So if you need help at structuring your construction business properly, our calendar link is down in the show notes. We're happy to speak. Hope you found this helpful and see you in the next one.